Yeah, we're
me
probably
off.
on right now.
Huh?
We're probably on right now.
No, it says it hasn't started yet, but I can't tell. Yeah, this thing is crazy. But I just want to make sure. I'll know when I see the arrow, right? And then I can pop it on. Today is St. Patrick's Day.
That's right, St. Patty's Day.
And I ain't wearing a damn bit of green.
Neither am I.
Yeah. I remember in school they used to pinch us.
Pinch you guys?
You guys didn't do that in your school?
No.
Yeah, if you didn't
What's the
wear
pinching
green,
for?
you get your ass pinched.
Oh, really?
Yeah, you get pinched if you didn't wear green.
No.
They don't do that no more?
I don't
Okay,
think
looks
so.
like we're on. Yeah, I see me. Let's see if I can see you now. Hold on, just one second. Cameras make you look big, huh?
Does it?
I think so. Hold on one sec. If it goes black, you're live on YouTube.
There we go.
Ah, wow.
Let's get it
That's
started.
pretty cool, right?
Yeah.
People out there watching us are all like, yeah, here they are. Okay, yeah, we're both on. Awesome. Well, Rob, it's St. Patty's Day. And like I said, back in my days when you were a kid in school, if you weren't wearing green, you get your ass pinched. They come up and pinch you. And it hurt. So you made damn sure you was wearing green. Anyway, hey, markets are down again this morning. And as of 6:33 a.m. this morning, there was a big, bold headline that appeared at the very top of the Bloomberg News webpage. And it said, how Diamond and Yellen helped secure a $30 billion lifeline for First Republic. Have you heard about this?
No.
Oh, man, wait. So the headline is part of a very long, highly questionable promotion of Jamie Dimon by Bloomberg News as the wonderkind of Wall Street banking. And in reality, under Dimon's tenure as chairman and CEO of J.P. Morgan Chase, he's been on a unprecedented crime spree, according to Wall Street on Parade, including being charged with, listen to this, Jamie Dimon has been charged with 5 felony counts by the United States Department of Justice, and his bank is annually ranked by U.S. banking regulators as well as the Basel Committee on Banking Supervision as the riskiest bank on the planet.
Wow.
J.P. Morgan Chase.
Yeah, it's number one bank.
Yeah.
It's crazy.
So this morning's headline of Bloomberg News was clearly meant to suggest that Dimon was the modern reincarnation of John Pierpont of J.P. Morgan, who famously came to the rescue during the financial panic of 1907 with a private pool of money. And the Bloomberg headline refers to the fact that J.P. Morgan Chase, along with Bank of America, Citigroup, and Wells Fargo, each ponied up $5 billion to place as uninsured deposits into the teetering First Republic Bank, which has lost 72% of its market value year to date as of yesterday's close. The balance of the $30 billion came from 7 additional banks. I wonder where them banks get this money.
Yeah, like where do they get it
I
from?
mean, is it depositors' money? Or is it?
Could be.
So another troubling detail is that the securities unit of J.P. Morgan Chase and Bank of America were among the book-running underwriters of a secondary stock offering of 2 million shares of First Republic on or around February 10 of this year. Interesting.
Yeah.
And First Republic closed at $135.45 on February 10th versus $34.27 yesterday, meaning these underwriters may have now legal exposure. In addition, the same underwriters led an August 1st, 2022 sale of shares of First Republic Bank to the public, raising over $400 million for the bank.
Wow.
First Republic shares were even higher than priced at $155.48. And this is all reporting coming from the Wall Street on Parade. Mm-hmm. I need to reach out to these people. I want to call Pam and her husband and talk to them. They're really cool people. Anyway, units of Goldman Sachs and Morgan Stanley were the other two underwriters in both the August and February secondary offerings. Both banks were part of yesterday's $30 billion rescue, contributing to $2.5 billion each in uninsured deposits to First Republic.
Yeah.
Now, Michael Bloomberg, the former mayor of New York, is the majority owner of the publishing and data terminal empire that keeps publishing these headlines about Jamie Dimon. Interesting.
Yeah.
And in 2016, Michael Bloomberg even co-authored an opinion piece with Dimon for the opinion section of Bloomberg News. And the same year, the New York Post reported that J.P. Morgan Chase was the second largest customer of Bloomberg Data Terminal business with 10,000 leases of Bloomberg terminals. And at the time, the terminals cost around $21,000 each per year, or approximately $210 million being forked over by J.P. Morgan Chase to Michael Bloomberg's company. So, Bloomberg's data terminals are the cash cow of their company.
Yep.
Well, during J.P. Morgan Chase's London well scandal in 2012 and 2013, where the bank gambled with bank depositors' money in exotic derivative trades in London and lost at least $6.2 billion, Michael Bloomberg was mayor of New York City instead of condemning this outrageous risk-taking, with federally insured deposits. Remember, the banks, the minute you give your money to the banks, people, you're legally speaking, these are all private corporations, and you've now basically loaned your money to them. They give you a piece of paper every month or every quarter or whatever that says it's a statement or a contract value. Well, guess what? It's only insured up to $250 with FDIC. Is it? Is it? I mean, come on now. SRC board members met back in November, and they were discussing bank runs, and here we are. We're seeing such a thing, and this isn't over with yet. This is far from being over. It's just now getting to the tip of the iceberg here. Well, anyway, Bloomberg was quoted in the Wall Street Journal calling Dimon a very smart, honest, great executive, adding the controls failed, and he'll look at that and he'll fix it. That statement appeared in May of 2012, and the 5 felony accounts followed from 2014 to 2020. I don't know about you, Rob, but if I get a felony on me, I'm in trouble.
Right.
I think that's called prison.
Yeah.
Right? Well, on September 16th of 2019, for the first time that anyone on Wall Street can remember, RICO charges were brought against traders at J.P. Morgan Chase. Remember that? By the United States Department of Justice. And what were they brought against them for? In precious metals trading desk was characterized at that time as a racketeering enterprise by the Justice Department. The DOJ couldn't bring itself to state the name of the bank where the traders were located, calling J.P. Morgan Chase simply Bank A. Mm-hmm. And then on September 29, 2020, the Justice Department brought the 4th and 5th felony accounts against J.P. Morgan Chase. And one count involved traders rigging the precious metals market. And other count was for rigging the United States Treasury market. Rigging? I don't know about you, but that sounds like prison, jail time. Well, anyway, the U.S. Treasury market, and as the Justice Department had done in all previous felony charges against the bank, it settled the charges with large fines, deferred prosecution agreements, and a probation period, and the bank has had 3 probation periods since 2014 for criminal activity. But the Justice Department did one thing on September 29, 2020, and that was unprecedented for a felony charge involving the rigging of the United States Treasury market. The Justice Department announces the charges without holding its usual press conference and taking questions from reporters. Now, the Justice Department's deal was so sweet for a criminal that it wrote in its deal with the bank that an independent compliance monitor was unnecessary, despite also revealing that the bank did not voluntarily and timely disclose to the fraud section and the office that conduct described in the statement of facts. Why did I share this with us all today? Because these are banks. This is J.P. Morgan Chase, Jamie Dimon, CEO. And I know many of you probably bank with J.P. Morgan Chase. Well, this is what you fear. Listen, we're going to talk next week of a firm that literally went bankrupt because they took investors' money and depositors' money and they invested it in foreign stocks. And guess what? MF Global. Remember this name because we're going to talk about it next week. MF Global literally destroyed people's lives inside and outside. They lost trillions of dollars. It was huge, and we'll talk about all this, but it never was recouped. People lost their jobs that were working with MF Global, and like I said, we'll talk more about it. Rob, you got any input on this? I mean, these are the banks we're talking about. This is where we deposit our money so that we can pay our mortgages or we can buy our groceries or we can, and all you get either now, I mean, who writes checks anymore? It's all digital. It's all with the debit card, which is digital, right? What do you got to say about this?
Number one, money talks, right? Really the way out of this for J.P. Morgan was to pay the fine. Right? That's really what it was. And as you can tell, this is a systemic issue going through the banking system. J.P. Morgan is one of many banks who've done this in the past and going to continue to do it in the future. And, really, if you feel that it's prudent and you're not against having more control and more freedom over your money, gold, silver is the best avenue for you.
And we're gonna. That's why we're here. That's why we actually talk about it, and we talk about it so that you don't lose your pension and things like that. Let me share something with you, Rob. Here is Ohio in the news again about pensions.
Okay.
This happened. Remember, this happened about 4 years ago. There was a big deal. Well, an Ohio Public Pension Fund for teachers revealed that it lost millions by holding more than $27 million in SVB Bank, Silicon Valley Bank, shares before the bank collapsed. And the state teachers retirement system of Ohio stated that the shares represented just a minuscule portion of its overall holdings, which was 0.03% of the total funding, which held over $88.8 billion in assets as of June 2022. And the statement confirmed that the bank had no shares of Signature or Silvergate Bank, which collapsed in the past. But STRS is a pension fund for over 500,000 current and former public educators in Ohio.
Yikes.
And this collective actions that were taken by the Treasury Department, the Federal Reserve, and the Federal Deposit Insurance. You know what pisses me off about this, Rob, is that they saved the SVB Bank because they're mainly liberals anyway. They're all people that vote for Biden and all this. But what's interesting to this is these teachers, what if they would have had more money in this bank and this pension fund was completely wiped out? Because here's the problem. The teachers union just probably did what their financial advisors or whoever it is instructed them to put that money into SVB Bank for their pensions, right? But the bottom line is they're not getting any of that money back.
Oh, the pensions are gone.
Gone.
Yeah. The pensions are gone.
I mean, it's happening. So this is what we're talking about, and this is why you want to input on this. This is why you want to get out of, your stocks, your bonds, your mutual funds, these sort of things at this point. I'm not saying totally get out of it, but I'm saying diversify.
Yeah.
Give us a call at 800-753-8534. My personal number, you can call directly here into the office, is 323-380-5485. Rob, throw your number in there as well.
213-466-1283. I mean, the issue with what happened with this pension fund is that, it just exposed the lack of control these individuals had over their retirement. Because many people, teachers, doctors, and other professionals are indoctrinated into believing that if I throw my money in a pension, it's safe, right? If I put my money into this program that's being offered by my employer, I'm taken care of. Like, this is going to be the best thing since sliced bread. But the reality is that you run the risk, as we've already seen with these teachers out of Ohio, you run the risk of losing all your money and being up a creek without a paddle. I mean, we've seen this coming from a mile away.
How busy have you been this week?
Pretty
My
busy.
God.
Yeah, pretty busy. I mean,
wires. We had 15 wires in 2 days.
Wow.
15 wires. Wow. And not only that, and I'm not just telling you that. This is real. This is really happening right now. And don't listen to all the phony baloney stories that you're hearing about how everything is great, everything is patched up, and this.
Well, if the financial system was so safe, if it was so safe and so secured, what did 500,000 retirees and active workers just lose their pension?
Yeah.
Right. Think about that. That's
$88
billion.
Lose their pension.
No, it got decimated.
They got decimated. Yeah.
Yeah. They lost it. They lost it.
Well, there's still money there.
There's nothing
a minuscule amount.
There's nothing there. That's $88 billion wiped away.
No, that's how much total it was. They only lost. It was It's like in millions. It wasn't the total, Rob. Mm-hmm. It was the actual. That was the total altogether that they had. But with SVB Bank, no. They lost like 28 million or something like that. That was a minuscule amount. The point I was making about
500,000 employees accumulated $28 million worth of pension money.
Yeah, but it didn't take out the whole pension. I'm just saying that it could have. I mean, think about it. If they would have had any more in that bank. And the point I'm making here is nothing is safe.
True, and that money's still in receivership by the FDIC.
True to that.
So they still can't access their money.
And remember, once you start banking, I'll tell you all folks something. I'll tell you a real quick story here. So 2 years ago, we were invited, and I went ahead and bit on the invite to take our company to Signature Bank. And we did just that. And the idea was that they were going to groom us and make us an IPO, and then we would sell the company for $500 million to a hedge fund within 3 years. Well, that sounded pretty attractive to me until I got in there and I started learning who the presidents were, and I started learning a lot of that, fraud was going. Anyway, long story short, we got out of there. But the point I'm making is if I would still be there, we would have to be now banking with the government because the government came in and took over Signature Bank.
Well, the issue is this, right?
I don't want to bank with no government.
Right. Nobody.
But we're going to anyway.
Here's the issue, right? Whether you lose your money or whether you have a portion of it completely, blasted. The bottom line is this, once a bank's in receivership, they could make they could move forward and restructure the bank using that pension money or whatever money's in that at that bank, whether it be from investments or deposits or from pensions. So, people are still not out of the crosshairs just yet. There's still, decisions to be made. And what I read this morning from the Wall Street Journal is that SVB, Silicon Valley Bank, has officially filed for bankruptcy. No bank bought them, no help, no rescuing from the Fed, right? So officially, that bank is currently has filed bankruptcy. So give it a couple weeks. We'll see how it plays out.
I got to tell you something. The South China Morning Post stated this, and they're talking about the collapse of Silicon Valley Bank
Uh-huh.
and how it's created a sense of panic within China's tech startup and venture capital sector, as the lender now served as a bridge between U.S. capital and Chinese tech entrepreneurs.
Crazy. Fucking crazy.
I mean,
Wow.
China, the world's second largest venture capital market across social media platforms, investors, and startups, they're all rushing to share news articles on the fiasco and the thoughts on how to prevent such a catastrophic moment. And for some companies, however, the impact is even tangible. And when China was still new to venture capital in the late 1990s, SVB Bank was among the first financial institution to start serving the country's startups, while traditional risk-averse banks avoided them. And over time, the bank has now become a public option for China-based startups, fundraising in the U.S. dollars, as well as some China-focused U.S. dollar venture capital things. And what Biden left out in his scripted comments on Monday was that the Biden administration was bailing out China's venture capital business, thinking, what the hell does China have on Biden? We know what he has. There's a lot of news that's coming out today, Rob, that's talking about Biden and his whole family, even his daughter receiving money. You know, it isn't just Hunter, it's his daughter receiving money as well. And, you know, what was it? The Oversight House Committee is now saying that criminal payments were made to the Biden family that was reported by the Oversight Committee. I mean, this is just, you know, public news out there that you can find. But, you know, I want to share something with you that really touched me hard. And that is, you know, this administration, they just think money grows out of a tree. And where it really grows out of is it grows out of our bank accounts, our pockets, because we're paying taxes for all these things. And he says we're not, but we really are, because inflation just keeps going up. And believe me, folks, inflation is a form of tax that you're paying. So when he says that it's only going to hit people with $400,000 or more, that's a lie.
Yeah.
Because inflation is a tax, and you're feeling it when you go into the grocery store and so forth. Well, guess what Biden is up to now? He's requesting billions of dollars to advance a gender agenda. And it's all over the news this morning that Joe Biden's 2024 budget proposal, I don't think this budget proposal is going to go through. I really don't. I pray it don't. But his 2024 budget proposal requests billions of dollars to advance his gender and sexuality agenda around the world, allocating far more taxpayer dollars to then dozens of other spending priorities, such as stopping fentanyl from being smuggled across the southern border. And Biden's budget request for this issue in particular has more than doubled in the last 2 years. And in the past, that focus would have been entirely on women and young girls. And in recent years, though, advancing women rights across the globe is sharing the focus and the funds with the president's gender agenda. And while Biden says he's cutting $3 trillion from the deficit over the next decade, his budget plan will increase the funding to promote gender equity and equality around the world. This is happening for real right now.
Yeah, that's crazy.
More of our taxpayers' money. Well, let's get away from all that and let's just get right to what Metals has been doing this week. So in the middle of a worldwide banking crisis, we have all of our precious metals up this week.
That's right.
And Safe Haven Gold is up 5.9% to $1,931, while silver is now up 8.7% higher to $22, and platinum is up 2% to $972, and palladium is up 6.7% higher to a total of a whopping $1,497 an ounce. And since a year ago today, gold leads the way up 1%, Silver is 11.7% lower, and platinum is off 2%, and palladium is 38% lower. One thing people are beginning to realize is that both in the banking sector and everywhere elsewhere is that the U.S. Treasury securities are not risk-free. And that's not to say that they are at risk of not paying their stated interest. As myself, Rob, I'm certain that they will, I'm concerned and I'm certain that they will pay it. But recent interest rate increases now on new debt have dropped the value of existing treasuries to half in some cases. And I talked about this before, where it'd be halved.
Yep.
And let me tell you, losing 30 to 50% of market value on U.S. government bonds has left many banks undercapitalized, as evidenced by the Fed's emergency announcement of a new $45 billion backstop fund to help strengthen banks' balance sheets. And consensus estimates suggest an interest rate increase of 0.25%, followed by the rate cuts, totaling 1.25% by the end of this year. So in other words, expect the rally in precious metals to continue. So, I see Cindy just walked in here. Hi,
Hello.
Cindy.
It's Annie.
Oh, Cindy, Annie. Anyway, it's Cindy.
Good morning.
Cindy, how are you?
I'm doing great. How are you?
You were supposed to. I thought you were going to join us this morning.
It is morning.
Well, it's
Somewhere.
Yeah, but me and Rob, we get here early in the morning.
Well, you guys don't sleep.
It's all good. It's all good. Anyway, Cindy / Annie, whatever. Cindy, Annie, Cindy, whatever. I know that's your middle name. But anyway, Cindy, what do you have to say? You've been in this industry for a long time.
Yes, I have.
And, as far as why is it important for people to get actually into precious metals?
Well, I think it's really important to have something tangible that you can actually rely on, not a digital currency, something that can be confiscated and locked away from you. I actually had a business before where we got investigated because they thought we were doing something wrong, but we weren't. But they confiscated $30,000 of our money. And
Wow.
we had to get a lawyer and legally fight to get that money back. And it's really crazy that there are people that have a higher authority than you over your money when you put it in digital currency and can take it away from you. Something that you've worked hard to earn. And I think a lot of people want to retreat to gold and silver and cash and property, right? Real estate, anything tangible, things they can see, touch, feel, because it's something you can actually rely on.
Well said. Well said. I mean, that's, and that, Rob, that goes right back to the minute you give your money to a banker, a custodian, whoever, legally speaking, these are all private corporations, and they pretty much now have complete control of your money. You then become a beneficial owner. You basically get a piece of paper called a statement or a portfolio, whatever, and, there's no insurance. Well, they give you insurance in a bank, and it's called FDIC insurance, and we've talked about that earlier. But, Cindy, I appreciate you coming in and saying your little piece. I know you got a busy day. We've got some pretty interesting things I got to talk to you about here in a minute, because I've been in here and Rob's been in here since 6 o'clock this morning. So, listen, stay tuned. We're going to talk about MF Global next week. That's one that you're going to want to hear about. And MF Global really rocked the financial industry. And like I said, a lot of people lost a lot of money, and a lot of people lost jobs. There were a lot of jobs lost as well. And it's because they made bad bets with depositors' money. Again, your money's not safe. Take care. God bless every single one of you, and we'll see you Monday.